All right, so I want to talk about the elephant in the room, which is inflation, that everybody is ignoring except the people who are buying gold. And, I mentioned earlier that now CNBC, they do mention gold, but just casually. They don't make a big deal about it. Hey, gold's going up. And every discussion about gold, they say, well, it must be because of the geopolitical situation.
In a world where inflation lurks in the shadows, there's one asset that's been sounding the alarm louder than ever: gold. Today, we're diving deep into the heart of the matter, unraveling the mystery behind gold's surge and exposing why mainstream narratives are missing the mark. Join Peter Schiff as he uncovers the truth behind the headlines and explores why gold isn't just a shiny metal. It's a shield against economic turmoil. So, let's listen to his critical speech.
We had no creation of manufacturing jobs at all. And last month's loss of manufacturing jobs, which was originally reported at minus 4,000, was revised to minus 10,000. So the jobs that we need to reduce our trade deficit, those are disappearing. The jobs we're creating are going to widen our trade deficit. So these are not the productive jobs. But Wall Street looks at these jobs reports, and they just look at it at face value. And the programs, the algorithms that trade all this, right? This is what they've been programmed to do. So as soon as this stronger than expected number came out, just like Pavlov's dog, right? These programs sold gold. So gold initially went down, but it didn't stay down because the real money, the real buyers came in and bought what the programs were selling. And then gold just spiked because this is a real move. The real gold buyers don't care about these jobs reports. They probably realize that they're BS. They don't care how many second and third jobs, broke Americans are forced to take because they can't pay their bills. They don't care about all this. They're buying gold. Bond prices got clobbered again today to end a horrific week for bonds, setting up a bloodbath. The yield on the 10-year now back up to 4.38, and on the 30-year, we're 4.53. So we're now closer to 5% than 4%. Pretty soon we'll be closer to 6% than 5%. Now, in the past several years, gold got killed when yields went up. Gold got killed on a strong jobs report. Not now. Gold went up. That's why I don't think there's much risk in the gold trade. Because believe me, if we had a weak jobs report, gold would have been up a lot more than $37. So in my opinion, it doesn't matter what the numbers are. Gold's going up no matter what. It's just that it'll go up even more on weak economic news than on strong economic news. But whatever the news is, gold is going up. Gold is being repriced. Central banks are increasing their gold reserves. They don't care. They don't care about the Fed at this point. They don't care how many rate cuts we're going to get this year. They don't even care if we get any rate cuts this year. None of it matters. Gold is going up no matter what. Now, the only thing that I think could cause the price of gold to go down is if the Fed hikes rates. And I think the probability of that is practically zero. It's not zero because obviously anything can happen. And the Fed should raise rates. But I don't think they will, especially with an election coming up this year. And the longer they wait to raise rates, the more damage it'll do to the Biden when they do hike rates or to the markets. I don't think they're going to hike rates. And so as long as the market knows that Powell's not going to hike rates, then just keep buying gold because inflation is going up. And if inflation is going up, that means real rates are going down. So if the Fed just stays where it is and inflation keeps picking up speed, which it's doing, and the Fed's going to do nothing about it, well, that's going to erode confidence in the dollar. That's going to erode the value of the dollar. Plus, we're on autopilot on the deficit spending. The sky's the limit. They keep passing new spending. Nobody cares about cutting government spending. Biden doesn't care. Trump doesn't care. And so the holders of dollars are getting out and they're getting into gold. And this trend is going to accelerate. That's why I'm saying there's very little downside risk as far as I'm concerned, yet there's massive upside potential. So this can't last. The prices can't stay this low much longer. Anyway, I got a lot more to talk about on inflation and the Fed. All right, so I want to talk about the elephant in the room, which is inflation, that everybody is ignoring except the people who are buying gold. And, I mentioned earlier that now CNBC, they do mention gold, but just casually, they don't make a big deal about it. Hey, gold's going up. And every discussion about gold, they say, well, it must be because of the geopolitical situation. That must be driving gold. That's the assumption they make. I mean, they're clueless. They don't even want to consider for a minute that gold is going up because of inflation, because the rate cuts are a mistake, right? Because their rosy scenario of a soft landing and rate cuts and 2% inflation is all a pipe dream. Right? They don't want to admit that. So they're trying to figure out why gold is going up because they want to hold on to this myth that they believe in, which is great because as long as they have no idea why the price of gold is going up, right, it can keep going up. And they're certainly not advising their viewers to buy it. They had nobody really coming on. They had people coming on. Anthony Pompliano on again today talking about Bitcoin. Hey, where was Bitcoin this week? Right? I mentioned gold up 4%. Silver up 10%. Well, the Bitcoin ETFs were all down 5% on the week. I mean, why is Bitcoin going down? If it's digital gold, why did it drop 5% when real gold was up 4%? I mentioned on my last podcast, Bitcoin never made a new high in gold. And you know what? It probably never will. It's probably downhill from here when it comes to gold. And again, silver was up 10%. Right? That's the new Bitcoin or maybe mining stocks. MicroStrategy, the poster stock for the Bitcoin mania, down 16% on the week. Right? This thing is imploding because I think what's going to happen soon is a lot of the people who bailed out of gold at 2,000, at 2,100, at 2,200, when we get to maybe 2,500, which we could be at very quickly, they're going to want to buy their gold back. They're going to have, seller's remorse on gold and buyer's remorse on these Bitcoin ETFs. So they're going to want to go out, or maybe they're going to want to buy some gold and silver stocks that they sold so much.
Thank you for joining us on this eye-opening journey into the world of gold and inflation. Remember, knowledge is power, and by understanding the forces at play, you can navigate the turbulent waters of our economy with confidence. If you found this video insightful, don't forget to like, share, and subscribe for more thought-provoking content. Together, we can uncover the truth and build a brighter financial future. Thanks again.